Today, I will tell you 2 ways to trade using Bollinger Bands to generate consistent profits. Bollinger Band is an auxiliary indicator developed in the 1980s by U.S. chart analyst John Bollinger. This is what Bollinger Bands look like. The Bollinger Bands are made up of 3 lines. The middle line is the 20-day moving average. The upper line is the 20-day moving average line drawn from the center line, plus the standard deviation times 2. Similarly, the bottom line is the 20. This is the line that connects the standard deviation times 2 from the moving average line. The 2 blue lines are also called the upper and lower lines. Bollinger Bands are popular because they tell traders whether the current price is relatively high or low. In today's video, we'll use the default Bollinger Band settings of a 20-day moving average and a 2 times standard deviation multiplier. The width of the band narrows and widens according to the volatility of the coin. This means that when the asset's volatility moves sideways, the band narrows. 95% of assets move within this band. If the candle closes to the upper Bollinger Band, the price has risen excessively and is likely to fall soon. Conversely, if the candlestick is close to the bottom of the Bollinger Band, it is oversold and the price is likely to rise soon. However, it does not necessarily move like this. In a bull market, the price may continue to decline further from the lower Bollinger Band, rather than rebounding from the lower Bollinger Band. The Bollinger Band sets the criteria for determining the target price and stop loss. For example, when the candlestick crosses the middle line, which is the 20-day moving average, the upper line can be the profit area and the target price. Up to the line, assets can fall. So far, we have learned the basics of Bollinger Bands. Now let's look at the first investment strategy. The investment strategy is a squeeze breakout strategy. This strategy takes advantage of the transition from low volatility to high volatility. In other words, the price movement changes from a moving sideways market to a trending market that is trending up or down. Whether this is a downtrend, you can expect a big trending market to come. Our goal is to target the early stages of these big trending markets. Step 1. Check if it is in the low volatility zone. This is the chart in the low volatility zone right now. BTC USD market by 30 minutes time frame. If you look at the center line, you can see that it draws parallel lines. Another feature is that the bands are very narrow. These 2 characteristics mean that the price volatility is low. The first step is complete. We have succeeded in finding the low volatility zone. Step 2 is to wait for the trend to be drawn. The trend line can move anywhere, either up or down. We wait until we catch the trend in either direction. This strategy takes a sell or short position when the lower candlestick approaches. Similarly, we buy shorts when the upper candlestick closes. It's close and we'll take a short position. But what happened next? Price bounced back again and rose to the upper line. In conclusion, this is a failed signal. How can I avoid this failure in advance? In order to filter out these false signals, I have experimented several times over the years and found clues to avoid failure. Let's look at the first candle again. It can be seen that the volatility gradually decreased during this time. To filter out false signals, we draw parallel lines that act as resistance and support. The 2 lines tell us where to start the trend. So we'll enter a buy at the point of crossing the upper band and breaking this white resistance line. This is our buy entry point. Not only the top of the band, but also the white resistance line broke through. Our stop loss point is below the resistance line. The target profit range is set at twice the stop loss amount. In this way, the profit and loss ratio can be increased and the account can gradually grow. Let's take a short position. If you look at this area, the center line is horizontal. It's a good condition for Bollinger Band trading strategy. And we've found an area where the volatility is narrow. We now draw 2 parallel lines, above the resistance line, below the support line. To catch the start of the trend, you need to hit the breaking candlestick on these 2 lines. The candlestick is the entry point for the trade on short. The point where the price breaks below the lower Bollinger Band line and the white support line is the point to take a short position. Take the upper part of the support line as a stop loss. Take profit is set at twice the amount of stop loss. This strategy works very well for 15 and 30-minute time frames. However, before using this strategy in practice, I recommend you run a back test. Now let's look at the second strategy. The second strategy is an investment strategy that combines the RSI and Bollinger Bands. As the name suggests, it is a trading method using 2 indicators, the RSI and the Bollinger Bands. We will use the default RSI value of 14 days. The goal of this strategy is to check the divergence of the RSI and use Bollinger Bands to find entry and exit points. First, let's look at what divergence is. There are 2 types of divergence, bullish divergence and bearish divergence. Bullish divergence means that the bottom of the candlestick continues to fall, but the RSI breakout is getting higher. This means that we can expect a move to the upside. Conversely, in bearish divergence, the candlestick highs are getting higher, and the RSI highs are getting lower. This means that Bitcoin's uptrend is not broken yet, but we can expect a shift towards the downside. However, it is important to note that not all divergence creates a trend reversal. Let's talk about strategy. The first step in the strategy is to find the divergence. If you look at this chart, the price is making higher highs and RSI is making lower lows, but we will not enter the short yet. Instead, we will wait for the candlestick to break below the center line of the Bollinger Band. This is the candlestick to break below the center line. The target price to realize a profit is set at twice the size of the stop loss. Let's look at a different example. You can see that the lows of the Bitcoin candlestick are getting lower and lower, but the low of the RSI is getting higher. We're waiting for the candlestick to cross the center line upward. This is where we enter the buy line. We enter the long position at the close of this candlestick, and our stop loss is the lower Bollinger Band. Our buy exit target is 2x the stop loss. The trading strategy I shared today is very powerful, but I recommend backtesting it before actually trading. See you next time.